All right, good morning, everyone. Let's start it up. Okay. All right, last night's session on the U.S. Markets was shaky, to say the least, into the close especially. Obviously, you can see the S&P really bombing out hard. When we fell on the S&P future, I believe we fell almost 40 points from high to low in the last 2.5 hours. So you can see they were trading around flatline around 2030. That's spot, but the future also very close. We fell all the way down to about 1990, I believe, on the future last night, slightly after hours. So yeah, about the final 2.5 hours of trading, we dropped about 40 points in the S&P future. It was pretty significant. Obviously, the Fed is what led things there. You can see the market kind of was just trending around flatline, up until the point that we had the Fed meeting. Fed meeting came out. We obviously bit back and forth real quick. You can actually see the wick here where we spiked up very quickly and then only just started to fail from there. I think for me the real, some people were saying that she was actually dovish. For me, I think a lot of the market was worried about the fact that deflation has become such an issue everywhere else, and I think people are very, very worried that it was going to become an issue in the States as well, with all the rest of these companies exporting deflation essentially back to the U.S. But she kind of just said that those are going to be short-term issues, and that in the medium term, inflation was going to drift back up to 2%. I think that's the part of the statement that really caught markets, unexpectedly, and the reason why we sold off so hard, that and the fact that the markets are probably a little bit priced for perfection when you look at what's going on with earnings right now. So we did have Apple, obviously, that was out the night before. It was traded incredibly well because of earnings. We had Boeing as well, that was out yesterday. Big, nice beat as well. But it just wasn't enough. Obviously, the Fed dominated things there yesterday. One of the other things that we looked at yesterday, we had third day in a row where we actually had the Greek banks absolutely implode. Most of the Greek banks are something that hasn't gotten that much media attention, but most of them are falling kind of 50, 60, 70% in 3 trading days. And I mean, that's worse than anything that ever happened in kind of 2008, 2009 in the States. So I think that we're at the point now where these banks are going to be going under now. It looks like there's going to be some sort of rescue. To me, actually, the market's really shaking it off as a total non-event, which surprises me. I think that obviously Greece is kind of a small little piece, but it's I think it's a piece nonetheless, and that it could really start to ignite things. So just keep an eye out for that in the next couple of sessions. In Asia, wasn't that bad in Asia considering how we sold off in the States. In fact, Australia actually held up relatively nicely. But the rest of the markets are all down about 1%. Not a lot of leadership there, just follow through probably on the back of U.S. trading. Our chart of interest this morning is out of Zero Hedge, the Permabull website. Which is better, a stronger dollar or a weaker dollar? And you can see here, during all the crises, it was during a strong dollar. So just keep that in mind. I think that it's something that you've got to start to potentially price in to the fact that that's exactly what could happen. I mean, it's a problem for the States to an extent, with the amount of companies that are global now, and you're starting to see it in earnings. You're starting to see how they're reporting, and then it also starts to become a strain for some of these other countries, obviously with what they, things being priced in dollars, although right now that's not an issue at all with inflation. All right, let's move into market corporate action today. We've got ConocoPhillips, this is out before the market. We've also got Google, Amazon, and Visa out after the market. Later in the day, or today, we've got market data. We've got nationwide house price numbers out of the UK. We've got unemployment rate out of Germany, PPI in South Africa, consumer confidence in the Eurozone, CPI in Germany, and then later in the States, we've got initial jobless claims, Bloomberg consumer comfort, pending home sales, and local rates, interest rates. That comes out at What time is that? 3:15 or something like that. So we keep an eye out for that stuff. There's a lot going on this afternoon. All right, let's get into the maps. First thing that I wanted to have a look at is, I think, still one of the most pressing charts in the market. That is light sweet crude, baby. This chart says it all to me. This is a significant level here that we are slightly dropping at the moment at about 44.30. Call it we're right at the level, but we've been flirting with for the last half a day to a day. That is the bottom end of the range in light sweet. That is the absolute low is basically right at $44. To me, this chart kind of says it all. We've got consolidation running out into that sort of level there, up near $50. I mean, I think you could say 50 if you really want to. But bottom line is, that's a $5 consolidation where we've not. I mean, if you think about it, you fall 50% from plus, even more than 50%. I think the oil price is falling about 60%, over $100 down to the 40s, and you can't even get a proper dead cat bounce out of this thing. It literally is just consolidated, and to me, it's looking like it's ready to go lower. It looks like to me like it's ready to take out these lows. If we do take out these lows, I think we go and we test a 30 handle on the oil price very quickly. So just keep an eye out for that. I think that will be the next round of downside out of the global diversified miners, and potentially out of Sasol as well in the same scenario. All right, let's look at CFR. CFR came back up yesterday. Again, came back up and tried to test this and get up and test close to this $100 level. You can see how defined this level is now, and how clearly it's been working out. So if you look here, we're really looking for, we closed at equivalent of 96.40 last night in Switzerland. We get below 96.70 here, then I think that we're dropping out of this ascending triangle formation, which is a really, really symmetrical pattern, and I like the way that this is setting up. To me, there's a lot of downside here. I wouldn't be surprised if the thing goes down and takes out lows. So just watch this. I think there's downside left here in CFR. I think the fundamentals for the case of arguing against CFR are also 100% there. With the Swiss franc, as strong as it is relative to all the global currencies, you got to think that these guys are going to be under significant pressure, because they're just not going to be able to pass on that kind of inflation to the client, I don't believe. All right. Next one we'll look at is Naspers. Naspers is an unstoppable rebel force that every time it gets going, you just got to freaking be on long of this thing. I kind of think that we broke out already, but I'd rather just draw, because of the round number being here at 1700. I'd rather look at it there and kind of run off of this wick on the left side from up at 1700. And we actually traded a 1710 late in the session yesterday. We closed below 1700, but if we can get above 1700 on Naspers here, I think that we've got a 150 rand move coming. So, we broke out here at about 1550. In 3 days, we traded from 1550 to 1700, and then we made this kind of little V-shape, this pullback, and then very, very quickly traded back up to it. I mean, it looks real similar to this move here. Obviously on a slightly shorter time frame, but looks very similar to that sort of move. And remember, when the breakout came here, you could saw 1, 2, 3 days we saw 1500 rand move. So there's no reason why we can't see it just as quickly here. So watch it. If we get a close above 1700 in Naspers, it could mean that we could trade to 1850 very quickly. All right. The last two that we'll look at in the session are Vodacom and MTN. So the two obviously doing the same thing, but Vodacom's just been in this ridiculously consistent trend that's a whole year. I mean, that's going all the way to, if we run it back to over here, that is going back to March of last year, beginning of March. I mean, we're talking 10 months that Vodacom has been in this range between 122 and call it 100 and let's just call it 138. I mean, it did get up to closer to 140, but it's been in this range. So right now, we're in a situation where, either we're going to fail off of this resistance, or we're going to make a breakout to new highs. So I think it's something to watch real closely over the next couple sessions. MTN actually only noticed this morning. I've been saying that from a fundamental point of view, we should be scooping this thing up, and it just hasn't played out in the market. But right now, it's starting to look more so, and I'm kind of thinking that even this is where the place where you pounce on it, because if you see here, it's really testing to break out of what's been essentially a 5-month downtrend in MTN, and we've kind of popped back above this little level here. So we had some real resistance that we were struggling with there. We bottomed out here several times at about $209. Once we got below that, we held below there for almost a whole month of January. We've been trading below that, and we finally just got back above that yesterday. I kind of expect us to maybe test that on the open this morning, and I actually am thinking that it might be a place to nibble. But if we get above, basically, I would say we just need to get above 212, then I think we're out of this downtrend in MTN, and I think we've got upside, and I think this thing's going to snap up hard, and I think that most of the guys that were soft holders that had been in it forever have probably gotten out of it now. So just keep that in mind. I think there could be some good upside there if we get close above 212 in MTN. Thanks a lot, guys. Good luck out there.